do you honestly feel that you have an edge trading the current state of the market? Do you feel that you have directional clarity? Because I don't. And a misconception that I struggled with early in my career was that I need to be trading, I need to be taking positions to make money. And this is not always correct. In fact, it's the sort of decision making that used to keep me spinning my tires. I've always been able to make money in these markets. The struggle used to be keeping it. And this was a major hurdle for me for years. And it wasn't until I reframed my view of the markets that I was able to clear it. I view the markets as an opportunity, not a risk. I am the risk. The markets are an opportunity. The markets do not force me to put on risk. I choose when to do so, and more importantly, when not to. People often say you must be a disciplined trader, but what does that actually mean in real time? What does that look like? For me, one interpretation of this is that cash is a position and patience pays. I've worked my ass off to learn the market structure and breadth analysis that I share here with you guys, but that's completely meaningless if I don't actually listen to what it tells me. The markets do not reward knowledge, understanding, effort, or time put in. For me, I've found that the market rewards mechanical execution of my models along with two very important non-negotiable things: proper risk management and proper timing. And I've started this channel and I've been doing nearly daily videos for about 4 months. And while I've taken some positions lately and I'm making money, I'm up as of close yesterday, 23% on the year. I did 184% last year and also triple digits to 2 years before combined. But none of that matters if I overtrade and begin giving that back. And I have to recognize that for the last 3 months, I have remained in a market risk profile C or B at best. I have not taken a full-size position besides a full-size Japanese position that I sort of had to take for it to be a meaningful trade because I couldn't get exposure to options in the Japanese market. But I have not taken a full-size position in over 3 months. Full-size risk position in over 3 months. And for me, discipline is recognizing this. Discipline isn't reading the room, that's knowledge base. Discipline is listening to what it's telling you and taking the proper action. Without bias, without FOMO, without fear, without opinion. And the market has been telling me for more than 3 months, it's simply indecisive. We do not have follow through. We're barely maintaining a trend. And I print money in a follow through market. I print money on trend continuation on the leaders. We're simply not getting it, or more specifically, sustaining it. So I'm deeply grateful for this platform giving me the outlet to share my passion, and I've earned the right to share it. But I'm noticing something, and I must remain true to the trader I have become. And again, that's one who reads the room without bias, manages risk first, and executes mechanically, or not. And while I sort of have been feeling the need to come on here and share trade ideas every day or every video, I'm realizing that's not what I want to do. I want you guys to know and learn with me that there's just as much value in knowing when not to press. So I'm going to work on being okay with not sharing new trade ideas every video. And I want to try to replace that with some other form of value for your time. So today I want to land on the point that we don't always have to be pressing. I say it all the time. This is not a game. We are not here to press buttons. And right now, based on many factors, most of which I'm going to share with you here today, I'm considering going all cash, at least well over 90% cash. I'm over 85% cash now. I'm considering flattening the swing portfolio. So let's jump into the charts and sort of discuss why that is. And I want to start with market breadth, as we always do here. And frankly, it's fine. It's totally fine. We're just off of highs in the SPY while currently in a higher lows, higher highs environment. We are trending higher in the SPY. RSP is just off of all-time highs. It's a fantastic look. Nothing to dislike here. IWM, all-time high close. Beautiful. We've got some more breadth indicators here and stocks making new highs versus new lows. Stable, above the zero line. And then the stocks above their 50 and 200-day moving average, resuming its uptrend. Breadth looks strong. And then we've got the VIX here, nowhere near that 2050 area where I find things to get a little jumpy. We're stable, truly. So why am I worried? And it's not so much that I'm worried, I'm just not confident. And for me, that's a signal. Pair it with the fact that I really haven't been noticeably, because I'm not taking full-size positions, in over 3 months. That's a bigger signal. We just don't seem to be able to sustain anything. We're just struggling to actually break out in the SPY, and not only break out, but actually hold the highs and get follow through on the move. We just keep coming right back into range. And then something else that's beginning to really concern me under the hood is we're seeing heavy selling in our leaders. It seems every time they pop up, we get heavy sell side on the tape. And I mean the real market leaders, Mag 7 and theme leaders. For example, we'll look at memory here. I think that has a chance to be, a leading theme in 2026. But look at this sell side pressure every time we break out in something like STX or MU or SNDK or WDC. And, this is all after like 500% moves in this sector. And then going over into intraday, look at the sell side pressure. To me, this looks like institutional selling with retail dip buyers floating it back up after the sell programs. And then look at things like Apple, just breaking down through its 50. Netflix can't catch a bid. This is a nasty look. Microsoft sitting on a cliff. Tesla also can't get follow through. It breaks out and rolls over, retraces more than half of the move at this point. Nvidia right back below its 50-day, could not break out of this flag pattern right back below the 50-day. Looking like it's putting in a possible head and shoulders. AVGO sitting on a cliff. Guys, this is a nasty look in the biggest companies in the world. Yeah, sure, Amazon looks good. Google looks okay. It just failed this breakout though on heavy sell side intraday. That's a nasty sell program at the open, okay? There seems to be some underlying institutional sell side pressure here that is weighing on the market's ability to sustain a move. And of course, you can counter this argument. There's the rotational argument. Space, drones, minerals, resources, financials, industrials, and some others, they all look pretty good. And we could be seeing rotation out of mega caps into other areas, which can be healthy. I'm open to this. We are still trending higher, and all-time high closes in the IWM right near it in RSP. The equally weighted Qs looks okay. But the real question becomes, do I actually think that these more speculative themes and sectors are going to actually hold the market up, let alone move it higher? No. We need tech, guys. We need the megas. It's that simple. And there's also macro stability that is becoming a concern. I would label it maybe even a little suspect. The implications of the US Venezuela operation, it's still unknown. China and Russia are not happy. We can just call it that. You've got this Greenland rhetoric, which has got the EU unhappy. We'll just call it that. We've got wartime military budget proposals happening. And the Supreme Court is ruling, apparently today at 10 a.m., releasing their ruling on the Trump tariffs. Unprecedented. There's riots and protests throughout the U.S. right now. Revolutions looking to start in Iran, instability in Asia, and still in the Ukraine-Russia war. Now, look, the markets have climbed a wall of worry since inception. I'm not a scared trader. I am simply noticing the lack of clarity and follow through and heightened headline risk environment that we are in. All while the SPY is sitting right at the top of its long-term channel and NASDAQ is flat out on a cliff. Do I feel like I need to go all in right here, position for the year? No. But I think we are at an inflection point where we are either going to go higher, we're either going to break out with conviction, or we're going to break down with follow through. I think we're very near that inflection point. And I am probably going to go into all cash and not only wait for one of those things to happen, but confirm. So to wrap this entire thought, if the reaction to the tariffs ruling today is noticeably negative, I'm going to go all cash. I'm probably going to exit everything in the swing account. I'll be at that point, I'll probably take a small hit, maybe somewhere around 20% up already on the year. I'm okay with hitting the eject button and reassessing. From there, I'm going to wait for directional clarity and confirmation. For me, that looks one of two ways. We either break out convincingly and hold above prior all-time highs. I do not want to see it come back into range. I want to hold above all-time highs and sustain the move higher. That will be a buy for me to the upside, okay? I think the markets could also squeeze. There's a lot of worry out there. There's a lot of things happening, okay? We could also squeeze, or we start breaking levels. We've got a higher low here that needs to hold, here, and really importantly down here. So if we do happen to roll off of this news today, I'm probably not going to do much with this 680 area, but this 674, 670 is the low number. If we break that, come back, retest, and fail, I will short the market, okay? Half size right here. And then if we break the 650 area, come back, retest, and fail, I will short the market full size, okay? And I think at that point, it would be very historically normal for the market to pull back and retest its all-time high level, only being at around 10% pullback, okay? The market has had 10% or more pullbacks, corrections in the last 25 years. This would be normal price action that would not break the markets, okay? So those are my two plays, and I don't think I want to keep pressing until we get one of them. Do we break out with conviction and hold and press higher again? Or do we break down? Going cash and waiting for one of these scenarios to happen will assure that I don't get chopped up trading indecisiveness, that I remain elite in my returns, that I don't give back all the work I've been putting in, that I don't apply necessary risk because I feel like I need to be doing something in the markets. I'm beyond that part of the internal struggle. I know my edge. I know when to press. It might be soon, but this ain't it. And I am not here to press buttons. I am here to make my money, make money, period. This is not a game to me. So I'm going to see how this week closes, and I have a feeling it's going to be pretty telling. So this Saturday session, I think is going to be very relevant and important. I'm going to do a full breakdown and look at every sector and build my plan with you guys together. It might be continue to wait, but I think that period is coming to an end. Today could be that catalyst. So I think it's just going to be very important to look and identify the strength and weakness throughout our sectors and build our plan for the weeks and months ahead based on what we see, okay? No bias, reading the room with you guys live, and then I do an AMA where you can ask me absolutely anything. So if you want to join me, email me at warrensnacks@gmail.com. I will send you the live link. It is not a pitch. It is not a webinar. I do not mention anything that's not asked of me. I do live market analysis, build my plan live, and open up for questions. So if you want to join me, learn more about the way I build a plan based on breadth and structure, email me. I'll send you that live link, and I'll see you there. Thanks, guys.